If you're self-employed, you've probably heard of sCorps, and rightfully so, because they're pretty much marketed as the gold standard of business plans, because sCorps can potentially lower, if not eliminate, your self-employment tax. And since self-employment tax is 15.3% of 92.35% of your net earnings from self-employment, that could be very burdensome. And to have that eliminated is great. But the reality is sCorps have some drawbacks that many people don't really talk about. So first off, with an sCorp, you have to pay yourself a reasonable salary. And reasonable salary proceeds are still subject to self-employment tax. So for example, let's say you are a self-employed electrician who makes $100,000 a year. Now, in order to figure out what your reasonable compensation could be, the most direct way would probably to do like a salary survey of like kind electricians in your geographic location that have, similar experience and do the same kind of job day to day. And let's say they come out to roughly $90,000 a year. Well, even though you make $100,000, if your reasonable compensation is $90,000, that means that only that 10% or $10,000 gap that you may, qualify as a distribution, only that's going to be, excluded from self-employment tax. The next is QBIDs, or qualified business income deduction. Because see, if your self-employment income is coming through your 1040 through like a Schedule C, then you very well be eligible for QBID, which is roughly about a 20% deduction on your income based off, again, whatever you netted from that self-employment. But see, sCorps can bypass that. So again, you've got to make sure you understand what your QBID impact is, because again, you very well could lose most, if not all, of your QBID. And if that's the case, then sCorps may not be worth it depending on that level of income. And last but not least, just know that your administrative costs are probably going to increase with an sCorp because, again, going back to my first point, when you have reasonable compensation, in order to have reasonable compensation, you need to have a payroll in place. Now, thankfully, payroll systems can be pretty inexpensive. You can get them for like $50 to $200 a month. So again, pretty inexpensive, but again, that's a cost that was not there before. Also keep in mind with sCorps, you've got to have your more sophisticated and formal financials. It's not just a simple, income statement anymore. Sometimes you have to have a balance sheet in place. So you very well need to have more upgraded software, or at least an accountant on retainer to help with that. And just know from a tax standpoint, the preparation needed to prepare an sCorp is much more involved than a standard Schedule C. So expect those fees to even double, if not triple, from, again, what you would see with a fee for a Schedule C. So at least from my perspective and a lot of my colleagues, we don't even have the conversation about sCorps until you start netting about $50,000. Because usually at that point, the scales start to tip in your favor about the discussions of sCorps. Now, once you start netting maybe $60,000 plus, then we're probably going to be a little bit more aggressive about, okay, the savings that you would get from self-employment is probably going to outweigh, again, those additional costs that I just talked about. And that's at that point where you start netting in your favor. So if anyone comes up to you and is pressuring you to get an sCorp because, again, you're making a few $1,000s, that's a huge red flag.